Hi traders, this is Houston Trong from the tradingedge.org, and here's your weekly market outlook for October the 14th to the 18th, 2019. So, short-term news continues to be the market driver, and this week was no different. As I mentioned in the previous week's weekly market outlook, even though the yearly bias is currently up, if you want to be making money in the short term, then you can't be so macro that you allow that bias to affect your short-term opinions. But at the same time, you don't want to be so micro that you allow the short-term noise to affect your day-to-day bias, even your in this case your half day-to-day bias. As you'll see in the charts this week, the short-term price action is certainly dictating the stock market right now, and that's because of the stock market's propensity right now to wait for any news. You know, there's a lot of headline risk out there, and the market has a general bias, and that's up. However, as news comes out, that can shift the perspectives of participants to the to change their opinions about markets and cause big flushes that become liquidity events to take out short-term traders. So very important if you're trading these markets, to have an eye on the bigger picture, but have the flexibility of the short-term charts, not the micro charts, but the shorter-term charts, to give you that short-term bias. Again, you don't want to be so micro-focused that you're getting chopped out in the noise, and you don't want to be so long-term focused that you're not flexible. So, for the coming week, headline risk continues to be, a very real thing. So continue to watch out for that. So you need to be flexible. And then there's a lot of stuff on the econ calendar and earnings calendar. So first off, on the econ calendar, there on Wednesday we have the retail sales number. Everyone's watching the consumer right now. It appears that the U.S. consumer is, driving global growth. So everyone's watching for that to see if that continues or not. Thursday, housing starts. Once again, U.S. consumer related. Jobless claims, U.S. consumer related. So we want to be watching out for that. That's before the market opens. And on the earnings calendar, we have the banks really kicking off the earnings season on Tuesday. JP Morgan, Wells Fargo, Citibank, all reporting on Tuesday. And on Wednesday, we have a couple big tech names, Netflix and IBM, as well as Bank of America, another financial. Then on Thursday, we have Morgan Stanley, so another financial name, really kicking off the earnings season. So to cap things off on Friday, we've got Coca-Cola, American Express, and Schlumberger being some of the bigger names. So earnings season is really beginning to kick into gear. So continue to be diligent around understanding what names you're trading and some of the potential risks of these names going into earnings. Now let's get into the charts and let's talk about the week that was, and then we'll go into what we can expect for the coming week. So this week, a lot of the indices look very similar. So I'm going to spend a bit more time on VIX and SPY today. But then afterwards, the Qs and the Dow will look pretty much identical. So we won't have to go too deep into those indices. Now the Russell, as I've been alluding to for the past, it's been like half a year now, it has been lagging. So the charts look slightly different, but overall, the bias is still the same on the Russell as the other indices, although the charts themselves are slightly different. We'll get through those, and then we'll spend a bit of time again talking about the week coming up. So let's begin with VIX, our friend the VIX. So what can we say so far? So far, 2 weeks down in terms of trading, and we still got an inside month. Okay, so inside month for the VIX. Right now, the week, it did close off red. So the question was, for most of the indices, including the VIX, was how do you get outside of last week's range? Because last week's range was fairly wide, and this week, the issue was that we were opening up basically right in the middle of the range. So barring any kind of unusual circumstances, up until about Friday, it really looked like we were going to stay inside week, and there was that distinct possibility that, had the news not come out on Friday, we could have easily just bumped back into the range again and ended the week as an inside week. So that partial trade agreement done, with the U.S. and China certainly got enough people excited to break outside the range, and that caused the week for the VIX at least to go to the downside. It did close back in the range again, but we did take out one side of that range. So at the end of the week, we end the week red, but you can see here we're sitting right there, right still at that level that we identified many weeks ago. This level here, it continues to be a strong level of resistance, and oftentimes, support as well, because, we had a few weeks back in August, we popped above it, stayed a bit above it, but now we popped back below again, and now it's back to being resistance. So continue to watch that level as we still have that unfilled gap there, 28.19, which we'll see more apparently on the daily chart. So to the daily chart, going into this week, what did we say last week, right? So last Friday, the issue wasn't the issue, but this situation we identified. The prior week, it went outside bar up, and then it went on Wednesday outside bar down. This is not this past week, but the week prior. Outside bar down. Going into Monday, the question was, does this thing keep going down? And if it does, that's the pivot that's going after. We knew right there, that's the pivot sitting right at the monthly open, right at the quarterly open. That is a very likely pivot to go after. Now, does it go gangbusters and just go straight down and take out that pivot, or does something like this happen? So we're waiting to see when this momentum to the downside condition was going to get extinguished or not. And so on Monday it did not. So it continued down, right? It did break below Friday's range, but did pop back up again. On Tuesday, that's when we had the news fall, the news flow come out that was quite negative, that caused the VIX to pop up about 8%. This also coincidentally with Yom Kippur, the beginning of Yom Kippur. So here's your Tuesday, Wednesday session, and Yom Kippur, has, in my experience anyways, has typically resulted in lower volume trading. And oftentimes you can expect lower volatility when you have lower volume. Now Tuesday, the equity markets, the indices, did have higher volume, not a lot higher, but you did have higher average volume. But if you look at a lot of the stocks, especially if you do have a large basket like I review often, many of the trading names were trading well below their average volume. So a lot of market participants were certainly off around the Yom Kippur holidays. They took the Thursday off as well, which was trading well below volume here, average volume. And so we had a very low volatility day on Wednesday. And then everyone was back in their trading seats by Thursday, and the VIX basically sold off again as the good news flow, and it went back into the trading seats. That started the trend back to the downside for the VIX anyways. And we ended up getting that pattern completed, that meaning this taking out this pivot here that we talked about in the prior week. Okay, so it wasn't a straight shot, but here, look at what we're talking about here: impulse, pullback, impulse. So we got that move, that kind of ABC pattern that the market likes to work in. Okay, so here, that's the daily chart. That may not give you enough clues intra-week to allow you to understand direction. So as I talked about in the beginning of the video, you want to be able to look at a lower time frame chart to give you a better picture of the short-term price action, but you don't want to zoom down so much to say, let's say a 5-minute chart where this noise here chops you up and you don't know what's up and down. So you want to have a higher term bias, but not so high like the daily or the weekly. That's not going to allow you to catch some of these moves, because if you understood what was actually happening, it was a very, very nice trading environment, even though it was a bit risky because of the the headline risk out there, and that the unknowns and uncertainties around the tariffs. But again, as traders, that's the type of environment we need to be operating in. We don't have a choice of when to trade necessarily, or let's put it this way, right? If everything was certain, then there would not be this game of speculation. That's what we do as traders, we speculate. So we can't expect to have all the news baked in all the time. Otherwise, this thing that we do called trading, it would not be called speculation. It would be called just basically reading the news and then just trading on already known events. That would no longer be speculation. Okay, so here's the short-term price action that kind of tells the picture. Going into last week, we knew this is the issue. Again, not the issue, but this is the condition. Outside bar, down, 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 down. Here is your Monday. You went outside bar down. If this high gets taken out, right, that high right there, then this momentum move will get extinguished. That happened right there. Okay, right there on Tuesday. Pops up. Okay, so here, right there, there's your weekly open in purple, and there's that prior line of support resistance that we talked about. Tuesday pops above it. Okay, pops above it, and it goes up and does an outside bar. Here, I'm just going to move the dates around here. This is your Yom Kippur session inside bar. So this is what you need to know. outside, inside. How are they going to break that? Now, in the second latter half of the of Wednesday, it goes outside, inside, and down. Then on Thursday, outside, inside, and down. On Friday, so outside, inside, and down again. So that was, if you understood that what was happening, then you would you just follow the short-term price action. Yes, you could be taking trades against the trend, but if you know generally for the VIX the trend is down, especially when it starts going outside bar down, outside, inside, and down, your bias for the most part is going to be to the downside on the VIX. I mean, long on the indices. So here's the tricky part, I think, for most participants, and I think a lot of people in my trading room were struggling, was because they weren't identifying the right short-term bias, and they were getting too short-term and getting caught up in the noise. So here, this is what the hard part was for a lot of people, was that they had these large range bars, but then in the second half of the trading day, they'd be very tight, right? You'd have these wide range bars, and once again, the second half would be very, very tight. So you're gonna really see that with the SPY in the next chart. All right. So back to the VIX chart now. On the VIX on the daily time frame, we did close technically below the monthly and the quarterly open. So right now, depending on where VIX opens on Monday, we'll have to see what about that. We're now trading back with full time frame alignment to the downside. So this thing continues to stay below the monthly, quarterly open. We can expect this to go back down and test that 2183 area down here. That will be the pivots to go after if it can continue downwards. First this outside bar here, then that pivot down there. Okay? So with VIX, let's talk about the SPY now. Mirror opposite. So let's go SPY. Let's go first monthly chart. Monthly chart, red month so far, but looking very much like a buying hammer. So they fought back. We had been down here at some point in the month, but they fought back now, looking like a hammer. Still a lot of month left. Week, once again, just like the VIX. How was this not going to be an inside week? Yes, it did pop back into the range again, but the question was, could it even take out that prior week's high? And it did it. It just could not stay above it. The SPY right now trading a bit of mixed time frames. So in the daily chart, right, unlike the VIX, it is not trading above its quarterly or monthly opens. So it did fall back in the range. So right now mixed, because you were here on Friday above the weekly open, but below the monthly and the quarterly. So this thing did act as resistance. But look what it did do, right? That was the pivot to go after. That pivot there, and it did it, right? So the high here was 298.46, and there's your high. I think it was 70 something. Yeah, 74. 298.74. And so if you just draw that in, you just know that that's higher than that, right? That's higher than that, and you get your broad information. Okay, so that's your broad information as the market does what it does best. It is a price discovery mechanism. It finds the liquidity, and this is why putting your stops above outside bars is generally a terrible idea. There's just no point to do that because you're going to get stopped out. There's no point to put it there. You might as well put it there if you're going to go short, because it's going to come get you if you put it up there anyways. More times than not. Not every single time. More times than not. If you look at enough charts, there is no point to put your stops above outside bars. Okay, so just like the 4-hour chart we talked about on the VIX chart, looked very, very similar here on the SPY. So I'm going to do it one more time, this time in reverse, and then we won't have to do this for the Qs and the Dow. Once you begin to understand these price patterns, it will help you greatly with your trading. The question always is the application of it, right? So the application can change, because when I say the application, price is universal, but I'm saying the application can change. The principles don't change, but the application can change because the markets are dynamic. Meaning sometimes the shorter price action dictates the trading actions, right? So this week was very much about the 4-hour bar was very much in control. Sometimes it's the daily bar, sometimes it's the weekly bar, sometimes it's the lower time frame chart. This week, this is based upon the market participants and how active they are. On very, very low volatility environments, then yeah, the daily chart's going to be enough because everyone's just buying or just slowly grinding up. There's no point to get killed by zooming in on a lower time frame chart and taking counter trend trades. But on this past week, because there was a little bit more risk due to the headline risk, people were making more short-term trading decisions, and that was being reflected in these kind of the shorter-term 4-hour chart. So once again, here's our trading week on the SPY, right? This was the outside bar up move, which is the mirror opposite of the VIX. The question going into this week was, how does this outside move get extinguished. This outside up move get extinguished because we know the pivot's right there. Right, there's that pivot. And so up until Monday afternoon, right, it was still outside up. Now this bar here on Monday AM, it did technically break below there. So that is your first warning sign that now you ran out of momentum. But it did go outside bar up. So the second half of Monday, they did try to push it higher. It did make a higher high, but look, it closed red. Here's the issue. If this low gets taken out, it's come back to the other side again. That's what happened. It gapped down. Here's your beginning of Yom Kippur. Breaks down, pops back up. The second half of Tuesday, this is your second half of Tuesday. Right there. Okay? So it goes outside inside. So the first, half of the Wednesday trading session was very, very tight. That was that's your Yom Kippur. Most people are off that day, and then it does go outside, inside, and up. Even though it doesn't go very far, it pop back above there, pulls back on the range. So anyone who bought this, all right, it's uncomfortable because it would be great if the market's closed up here and you'd be sitting on some profit. Let's say you're trading the SPY. You buy this breakout and it breaks out, but it comes back in. And it's now a bit risky, right? Because now you're going into the next day and you're not sitting in any profit right now. So this is what the mindset of most participants. Had you bought this breakout, you're sitting underwater here. Had you bought this area, and now Thursday opens up and it takes out the low. So anyone who put their stop too tight, and sometimes you have to, that would have stopped them out. Then it went outside inside, and they have to get back in. So had you got stopped out here, and this happens, you got to get back on the trade. This is why this is a momentum move. Because if you get stopped out right down here, you got low ticked, right? And that's just the nature of trading. That's the way the markets work. That's why outside bars exist, because people get stopped out on both sides. And you have to get back on the trades. Outside inside, pops back up. There's your Friday. It did pull back again on Friday after that strong push in the AM session. So if you notice the sequence, outside inside, and up, right? So very, very a very common pattern there. So now going into next week, here's the question: can it take out the lows here of this 4-hour chart? If it does, there's a chance we come back in and we do this gap fill, as that was our breakout area, and then we have a big gap right there. So that's what you need to watch out for going into Monday. Now let's talk about Qs. Now we can fast forward a bit, go a little faster, as we now have that general price pattern understood. That was the price action for the week. Okay, so for Qs right now, inside and down on the month, but right now the Q is looking like a strong hammer. If this closes like this, right, that's great, because the next month sets up a possibility for bears, or for bulls anyways, for an inside bar reversal back to the upside. Or for the month left over, if it keeps going, this can turn to an outside bar. This could turn to an outside bar and go inside outside. That'd be a very, very strong momentum move, as anyone who got short down here, if they're going to go long, they're going to have to start thinking about that if it breaks above this prior month's high. Weekly chart, strong week so far for the Qs. We had that 1.22% move on the Qs on the weekly chart, and Qs now trading with full time frame alignment to the upside. Cleared that monthly, quarterly high, weeks way down here. So we're trading with full time frame alignment to the upside on the Qs. Okay, now the Qs, same 4-hour patterns. Outside insides, all driving these last 3 trading days to the upside. Okay, let's talk about the Dow. Now, same thing with the Qs. Here's what you need to watch out for: is on the Qs. Certainly, you don't want to see this. If it starts to break below here again, it's possible it comes back in and does that gap fill. But right now, the strength is definitely on the buying side. Okay, but right now the 2-day chart makes it more apparent. You can see it here. Okay, so here it went outside bar down. The momentum got extinguished when it took out that high, then it went inside bar and pop up. Now, if this thing breaks below here, you have the risk that it comes back in here and tests that breakout level and that gap. Okay, let's go to our friend the Dow now. Actually, let's go Russell first. Russell. Okay, so Russell, very much the laggard right now. Still red month on the Russell. Beginning to look a little bit like a hammer, but trading below the quarterly opens. So still red in them, red in the quarter, red in the month. Inside week for the Russell. So out of all the indices, only the Russell and the Dow both ended as inside weeks. But this thing did not even come close to taking out the prior week's highs or lows. So firmly inside week on the Russell. The question now is, Which way does this inside week break? And that's what you want to be watching. Can Russell try to play a bit of pickup here or catch up? Otherwise, it's you can break to the downside as well. That's the other option. Take out the low of that low. We go back down to these quarterly lows. Okay, so for the Russell here on the daily chart, we had this move outside and up. Then here's your Tuesday, went down, but immediately fought back with a inside bar, and then it went inside bar up for Thursday, Friday, and look at that big range on Friday, big range on Friday on the Russell. Okay, let's talk about the Dow now. All right, just like the Qs, as I said before, you want to be watching out for this. The inside bar up, there's a break below there, so we can come back down through the range again. You need to watch out that it doesn't come out through the other side and trigger the inside week to the downside. Dow. Okay, Dow, red month, but like the Qs, looking like a hammer right now. So let's draw in how far we are away from those all-time highs. So based on Friday's close, look how close it is. 1.57% away from all-time highs on the Dow. So really not that far. We are still trading below, though, the quarterly and monthly open. So we did test it, right? It did hit that area. It acted as resistance. See right there? Wasn't enough, again, buyers to break above the prior week's high. It came close. So the prior week's high was 270.29. We got as high as 270.14. So literally 15 cents away. Again, here's that breakout level. I said we're gonna, we had a good chance of testing it, right? So when impulse move, pull back in again, deep pullback last week, right? It pulled back very, very deep, and then pop back above again for an inside week. So this is quite bullish if the buyers can step up here and break this inside week to the upside, because then those all-time highs are really not far away, and that will become the pivot to go after. There's your all-time highs right there, 273.99. That will be the juicy pivot to go after. So you want to be looking for and how the Dow can break this 270.14 if you're going to be a buyer. So on the, say, the Dow chart, okay, so that 273.14 level was set here on the Friday. Okay, so 270.13 area, right around there. Yeah, it's set on Friday afternoon. So how does this thing break back above there? So that's what you want to be looking for as a setup. If you're going to be a buyer of this, right? If the Dow can break above 270.14, how does it do that? Does this go straight shot like that? Then you don't want, that's momentum, and you need to be wary of buying that, because that's a breakout. And as we know, and I've said many times before, most breakouts fail. So you don't want to be taking a shot of simply just breaking to 70.14 and hoping it doesn't come back, because most times if you try that, you're going to get stopped out unless you put your stop really far away, but then you're going to take a lot of dollar risk on. So in this case here, your best bet is to look for some sort of basing or consolidation that's happening here before it tests that 270.14. Or if we break above, we wait for a pullback to retest this level and then take it off. That'll be a way nicer trade than simply blasting up and just hoping that momentum carries you to these all-time highs. That's not a great strategy by any means. So that's our look at the Dow. Once again, this quarterly, monthly right now, though, acting as strong resistance, right? So we talked about that already in the weekly chart. If it can break above that, that's going to be the pivot that we saw that the SPY and the Qs went after. So that's the pivot to go after. So that would be, what's the high there? 270.29. Yeah, if this thing triggers, that could trigger that. Okay? Because the reason that would be is this weekly chart. That's the high there, 270.29. This would be an inside bar, break to the upside. The pivot to go after would be that pivot right away. So that's the pivot they're going to immediately go after. So that's what you expect to break. So that outside bar high becomes a very, very juicy pivot to go after, if this thing can continue to go upwards. Let's talk about TSX, because TSX had a red week, but really did not go very far. So has certainly pulled back, not a lot, but pulled back from its all-time highs. Down 1.5% on the month, red month so far. Issue is you're trading below monthly, below the quarterly open, of course the monthly open. Inside week for the week, firm inside week, right? So this is what I was referring to about the the U.S. equities market, is how do you not stay inside week and look like that? Because that went nowhere. 0.21% negative, 0.21% on the week, really went nowhere. Firmly stuck inside of the prior week's range. Now it gets interesting. This is what traders get frustrated, because you get inside weeks and nothing happens, but that's because their perspective is too short term. the reason why you get really good moves is because you get inside weeks, right? The reason why we have expansion moves is because we have consolidation. So we need to have both types of markets, expansionary periods and contractionary periods, because that creates markets that move. So yes, it would be great if you're a momentum trader or a person who looks for big moves, for the markets to always be moving like that, but that's not the natural ebb and flow of the markets. So this contractionary period sets up more opportunities for the coming weeks. So now for the TSX, we want to see how do we break outside of this tight week. And just like the game plan I shared with you on the Dow, you want to see how price breaks out of either side of those levels. Okay, so with the TSX, again, very, very tight trade action on the 2-day chart. This is what this is basically what happened. So let's go on the 2-day chart. All inside this, right? So very, very tight stuff prior week and the first day of the week there, Monday, then inside for Tuesday, Wednesday, then Thursday, Friday, we did a inside bar up, but Friday pull it back into the range again. So very tight trading. On the 4-hour chart, it looks like this, inside bar reversal to close the Friday. So there's your Thursday, outside inside, went up. That was good because, good in the sense that, I don't really care about the direction, but it was nice because it took out these pivots here. That's exactly what we were looking to see. The market's taking out pivots, did that, then pulled back in again, creating the inside bar reversal. So this, once it broke below there, now this stuff comes back at risk again, as these are the short-term pivots that traders might go after. Okay, so fell back below that weekly open, and of course there's your monthly, quarterly open right there. Okay, so watch for that on the TSX, that these levels here, how do you break the prior inside week? Okay, you go on the 2-day chart. Okay, so here, if it breaks, here's the issue. If it breaks below there, they're going to go after that pivot. If that pivot goes out, they take out that pivot, then that pivot becomes potentially in play, and then you have to see if that breaks that weekly inside bar. Let's go to EM now. Emerging markets. Emerging markets are very, very strong this week, and this is kind of the tell. There's actually a few tells this week about the direction of the markets. Number one, EM held very strong most of the week. Even as it was pulling back earlier in the week, it was not selling off that hard. A lot of the actual Chinese ADR names are holding in strong. And then secondly, we'll get to the charts in a few moments here, but bonds and gold and even silver, it was a risk on environment because those things were selling off for most of the week. We'll talk about that in a few moments. So right now, EM, inside month. Okay, so inside month, green, up 2% already for the month of October. Okay, this week, nice 1.86% move. Green week most of the week here for EM. Okay, now for EM on the, we don't need to look at the intraday charts. Well, actually, we don't need to look at the higher time frame charts. We saw those already. But here's the 4-hour sequence. Okay, so the 4-hour sequence right there. There we go. So here, this is the prior week, right? So outside bar and up. So remember, last Friday things look really bad going to. Sorry, this is not last Friday. Sorry, my bad right there. Here, going into last Friday was up. Momentum gets extinguished on Monday. Okay, so it gets extinguished and it goes down, down, down. Here, this is your Wednesday. Sorry, your end of Tuesday. Looks really, really bad because you have an outside bar. But I think if you've followed me enough by now, you've heard what I've been saying. Outside bars are never that negative or positive because you need to see what the next bar is. It's just not enough context to say this is the bad bar or negative bar, because it's not. Because what happens? Because if the next day the buyers step up and they take out that bar's high, anyone who got involved in this sequence short, they're going to be in big trouble, right? So that's how agile you have to be with that understanding, is that if you're short here, if this happens, you have to get out. You're completely trapped here. Not only did did these guys have to cover, but they gapped over them. So it opened up here, right? So this is a kicking pattern. A bullish kicking pattern to the upside happened on Wednesday. So anyone who got short here, especially if you're down here, you got jumped over, you got gapped over, and now you're really in the pocket in the hole. So if you didn't cover here and it goes inside bar, what's the worst thing that's going to happen? This bar, right? So because it gaps up again, right? So the next day it gaps up again, and look, they take it 1% up in the morning session. So these guys, if you didn't cover down here, you're really squeezed, and you can feel the markets, the participants, because anyone who got short thinking, okay, this tariff talk thing isn't going to play out, they shorted Chinese companies and they shorted the EM, and they were wrong right away. The next day here, They're wrong, and even more wrong here. So all big losses start as small losses. Yes, this is a painful loss already because it already gapped above here. This is now even a worse loss because you did not cover down here, right? We've all been there. If you don't cover when the losses are small, they can turn very big very quickly. And this 1% day here, if you're holding it, this is a terrible feeling because now it's above the weekly open and you're trading above the quarterly and monthly open there too. So there's really no reason to be in this trade anymore. There's really no reason. This day, this second half of Thursday, maybe the bears are just hoping that something bad was going to happen on Friday. And then the worst thing happens is the gaps up again. So you tap, 1, 2, 3 gaps up, and these guys who did not cover down here now they're really sitting on big losses, right? Because that's a really painful one because that's a 2% gap up. So if you got wiped out there had you not covered when it was small here. So very valuable lesson there to have the mental agility to get out when the price action is telling you to get out, and not try to play the macro news cycle. Because once price is telling you you're wrong, you need to listen to price and respect that. So this point here, inside bar, if it does come back down, it would be an inside bar reversal. That will be too late for these guys for the most part. These guys probably covered in here because they got squeezed too badly. But this thing could go inside bar reversal now and come back down to gap fill that. Again, a little too late possibly for guys who were down here who got short and held too long. Okay, so that's your EM pattern. So very nice trading on EM, especially if you're on the long side because they squeezed them really hard going into the final 2 sessions of the week. Now, TLT. Okay, so TLT, risk off the whole week. So right now, TLT still inside month. So right now, inside. So this range, right? It's a huge range. That's even a bigger range in the month of August. The question has always been, how do you get outside the prior range? That's always a question. How do you get outside the prior bar's range? Because if you don't get outside the prior bar's range, you get choppy trading, right? And you can choose, if you don't want choppy trading, you stay away from inside bars. Or if you have the flexibility and you're okay taking both directions, then you don't mind trading inside bars. But when you're trading inside these things, you have to be careful for changes in direction. Right in the middle of the prior month's range right now, how does this thing not stay inside of this prior month's range? Bigger picture though is this. Look, outside up. Even though TLT's had a bad month so far, down 1.85%, we're still outside up condition. Until this low gets taken out on the monthly chart, momentum's still to the upside. Okay, weekly chart though, we did go outside bar and down. So that was the scenario. Outside, inside, up, and now look how bullish it looked, right? Like if you just do this, and you tell anyone that looks great, doesn't it? Look at TLT, right? We're going all-time highs, aren't we? Because that's the issue, right? The charts always look best before they look worse. So once you understand this, once you understand that, and you see enough charts, you realize that this outside bar is a warning shot. It means you got to really begin to pay attention here because this is when people are getting aggressive and anything can happen. Because going into this week, you thought, okay, well, this can go outside bar and up, and that momentum continues. But if this happens, boom, that doesn't look so good anymore, does it? Now it looks like it can come back down here and take out that pivot low. Again, outside bar and down is to be objective. All you know is this: outside bar and down. And in order for the momentum to the downside to get extinguished, you gotta take out that prior bar's high. If you take out that prior bar's high, again, they're going after that pivot. Does it happen this week? Who knows? It could be another week where it goes down again, and it'd be the next bar's high that you have to watch before momentum gets extinguished. Just like here, right? Outside bar down. It took another week to go inside because this is a big range. If it's a quiet week next week, it stays inside bar, then it can do that where it takes out the high of that bar again and goes back to the upside again, taking out that pivot high. Okay, so that's TLT for you on the weekly charts. On the daily, we'll go a little faster now because I think we've covered a lot of this action. But there's the situation. Your Monday breaks down. Okay, so look, momentum move up to the upside, right? Look at the daily chart. That's a prior week. Immediately on Monday, they extinguish the momentum by taking out that low. That's a red flag. Okay, so if you're long, then all of a sudden it goes outside day. Then boom, outside down. Look how nice that is. Outside up, outside down. So basically the mirror opposite of the prior week, right? Outside up, outside down. So really interesting price action. Here's really funny action. So you look at the you saw the price pattern on the daily chart. Look at it on the 4-hour chart. Look at this. Outside, inside here, prior week. Outside, inside, up, inside, up, inside, up. Here's the opposite. Down, inside, down, inside, down, inside. Right? So very, very interesting price action there, because it simply means that all the action happened in the AM session. Right? So you had the big range in the morning, and in the afternoon, it was dead. So the news flow came out in the morning, moved the price action, and then by the afternoon, it wasn't enough news flow or any kind of catalyst to break the prior 4-hour sessions range. So it frustrated a lot of people in these 4 hours in the afternoon sessions because they were getting chopped up, right? That's tight trading. That's really, really tight trading in there. So not a lot of range, especially for guys who are looking for range. So very, very interesting price action there for TLT. So the question going into this next week is this. If it goes and breaks above this high here, that's an inside bar reversal to the upside, and that would, look to take out some of these gaps that are now in the charts. So again, it looked very bearish for TLT, but again, would not take much once again to go inside bar, back up. The only issue here is that there's a monthly open, quarterly open. Can you break back above there or not? If it does, if it can break back above here, then we're going to go after that pivot. Or these gaps, unfilled gap there, unfilled gap there, right? Unfilled gap up here. So lots of gaps potentially for TLT to come back up through again. Sets up for something interesting at some point. Not saying right away, but look at the unfilled gaps on the daily chart, right? Unfilled gap there, 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 right? So that we have a lot of unfilled gaps to take advantage of. Gold had an interesting beginning, but I got rough in the later half of gold. So gold right now, the bigger picture. Let's just take a bigger picture of the month. Green month, even though it's still green month. 0.84 up, bounced off of that quarterly open. Inside week, so kind of a tight week for gold. Did not do that much, though mostly negative, minus 132% on the week. Okay, so on the gold chart, what I want to bring your attention to is the 4-hour chart. Okay, so once you understand the 4-hour chart ruled the week, that was what you were basing your decisions off of. Here, outside, inside, this is on your Wednesday. Outside, inside, pops up. Once you break below there, there's your inside bar reversal. Inside bar reversal, down, down. Okay, that's your GLD chart. Once again, just like the TLT chart, if it breaks above this area here, right, that turns into an inside bar reversal. Now that we have this inside week, we want to be seeing how do we break this inside week. Okay, what kind of price action is going to be necessary to break this inside week? Because right now in the 4-hour chart, you have an inside bar. If this thing breaks below the low of this inside bar, we're going after that pivot, and that's the weekly low. And that would trigger the inside week to go down, the prior inside week to go down. Then we go after that pivot there. Okay. However, you pop up back above here, then it's going to get a bit choppy again, because then you got to find a way to break above this high, 142.58, which was this week's high. Right. So how do you get there? That's what you need to be looking for in the price action, is how do you break that 142? Is that 142.58? Yeah, 142.58 high. Okay. The way you do it is by breaking above this 2-day bars high, and then they go after that pivot there. Okay. So let's talk about silver, because silver looks good last week, but again, just like all charts, so, sometimes things look good, but they don't plan out. That's where you have to be a little more flexible. Right now, SLV monthly chart, green inside month. SLV coming very close to breaking above the prior week's pivot high, and then going after that pivot high there. It tried to do it earlier in the week, but the seller stepped in. So outside and down, went to the downside, but the momentum has been extinguished. Even though this is not what you want from as a seller, you obviously, if you had, a buyer, if you had bought in here, you'd obviously want to close higher than the prior week's high. The fact that but it didn't do that, right? But the fact is that you did crack above this high. That means some people who are short did get stopped out, who put their stops there. So you have fewer shorts in this trade now. Now you need to see, can you clear back above that 1664 area again to reignite the momentum back to the upside to go after this range? That's what you want to be looking for on SLV. But just like on the GLD trade, it's all about that inside bar reversal that broke things down. So there, see this situation here. So that's your inside week high. It broke above here. So it broke it right there and went inside bar up. Not enough. See, if you just buy momentum, once this low gets taken out, that's the prior week's high. Once this low gets taken out, momentum is gone. Because then you're inside bar reversal right there, boom, that gets taken out there, and then anyone who got long here gets stopped out. And they went off that pivot there. That low of 1628 took it out right there. Okay, so there's your SLV chart. let's talk about cryptos, because cryptos had a bullish first half of the week, and then it did sell off a bit in the second half. Now, I had mentioned in the prior week that I was getting very close to, actually, I did execute shorts on both Bitcoin and Ethereum. They both got stopped out. I took them out early because I saw the strength coming in as traders, quickly came in to buy those lower levels, those quarterly low levels. So back to the higher time frame chart for Bitcoin here, inside quarter, last quarter, and I was looking to see if we could break below that low. When it popped back up, it didn't look like it was going to tick out that low. I quickly covered and went long on BTC. Still, the issue is we're still not that far from that quarterly level. So that's still something that's potentially in play here. If this past week's price action falls apart, they're going to go after that quarterly low. So let's talk about Bitcoin on the daily chart, weekly chart, excuse me. It did take out the prior week's high. Okay, so it went, this bar's lower than that bar, so that's your quarterly low right there, and it did pop above. If this week's low gets taken out, they're going after that low there, right? And that will crack the inside quarter. So watch out for that. This week's low is very important, because if it breaks below there, they're going after the prior week's low. Okay, so on the daily chart, here's the issue. So I think I believe I got involved on the 2-day chart. I think I explained it last week. 2-day chart on Bitcoin, 2-day chart on Ethereum. Here was the short right there. Outside, inside, right? Because that was the quarterly low right there. 77.1470. That was this outside bar's down. Outside bar's low. Went outside bar and down. It broke down some more. But here's the issue. It became a new week, and then all of a sudden things changed in terms of time frames. All of a sudden the open was down here. The buyers defended right away, and it popped back up. As soon as it popped back up, I realized they're going to come after that pivot. So there's no point taking the full stop. So I quickly got out before it hit that pivot high there. So did not take a full loss on that stop, and then got back in again to the upside. On the daily chart, it's very apparent. You'll see here. So right there, inside bar and down. This here, they defend. See the new week? Right there. It breaks below there. That's a lower low. But as soon as the new week happens, they did break a low, pops back up. Once it goes green again, you have to watch out because it's going to come back to the other side. And there's your inside bar reversal. Okay, that's your inside bar reversal on the daily chart. Inside bar down, reverses to the upside, and bang, back up it goes. On Thursday, they did have a big selling day, so down 3.7% roughly. But right now, the quarterly level and the monthly level are holding. So that's what you want to see. But if it goes outside, inside on the daily, if it goes inside bar and down, you got to watch out here because it can come back down again, take out the prior week's low. That's what you want to be looking out for on that daily chart. But on the 2-day chart, the momentum is still in the favor of the buyers. Not by much though, right? So here, outside bar and up, right? Now if you see this low get taken out, then that will break the near-term momentum, the upside, and then you have to worry about this pivot that they go after that pivot there. Okay, so right now very dynamic trading because you have to watch out which way these things break. So right now it's very tight, and it's possibilities of some head fakes there. Okay, so let's talk about Ethereum. On the quarterly chart, we have the inside quarter still. We did break below the prior quarter's low. Sorry, the prior quarter did have a green quarter, but it did break below the prior quarter. So this is the monthly chart. I'm talking about the quarterly chart. Inside quarter, yeah. So we're looking to trigger that inside quarter. Did not do it yet. Okay, but still, that range is still possibly in play because if this plays out, it goes inside bar up. If you take out that inside bar low here, that turns into an inside bar reversal on the quarterly chart, putting that pivot and that pivot into play. So we'll go back to the monthly chart. Right now, inside month. Okay, so there's your week. It went inside week and up. Okay, and if they take out the low of this week there, this week's low, they're going to go after that pivot and that pivot there, which would then break the quarter. So we draw this line here, this line right there, and that will be your inside quarter lows right there. This is what you need to watch out for, is that if this week's low gets taken out on Ethereum, then they're going after that pivot and that pivot, which will then trigger the inside quarter to the downside. So that's the game plan if you're going to be short, is to see how they can break this week's low. Okay. Otherwise, the buyers step up. Then, right now, you're still trading with kind of a negative bias because you're still trading below the quarterly and monthly open. You're right there, right? So buyers have to really step up here to show they have the mojo to hold it above those levels. Otherwise, we fall back in the range again because the bias is still to the downside. Okay, so on the daily chart, very similar pattern. If you recall, I took it on the 2-day chart, and I stopped myself out really quickly because here, it was supposed to be an inside buy reversal short, right? So this low here, when that was taken out, I got short because the anticipation was if this thing breaks, it should take out that low, and then that low. But as soon as it popped back up with the new week, then there's a risk of this coming back to the other range here. So you don't want to wait for it necessarily to come get you. So on the, let's see, do it show on the daily chart. Let's try the daily chart here. Yeah, the daily chart. Okay, there it is. That's the sequence right here. This is the significance, is that it goes inside bar and down. It took out these pivots like they're supposed to, but the new week happened. This is the risk and the importance of watching time frames, because anytime you have a new week, this is why Mondays are so important. Then the time frame participants or the bias for some of the time frames can change based upon how you open. In this case, they bought right away, and so then it was a green week. Once this guy gets taken out, they're going after all these pivots, and that's what happened. Okay, so Ethereum currently right on that level, right? The weekly and quarterly open. So it does go outside bar and down. What do you know about that? This went to the downside, but tomorrow, if they break above it on Sunday or Monday, break above here again, possibility comes back up. But the issue that you see with Ethereum right now, and Bitcoin for the matter, is you can see the Bollinger Bands, they begin to tighten. That means we're getting lower and lower volatility. Things are tightening and tightening. So you have to watch out that you don't just get some really tight trading action that turns into chop. Like, it makes it harder and harder to trade. So you don't want to be too active yet until you can take out one of these levels. Okay. So that being said, let's do a quick rundown now, a few stocks, then we'll wrap things up. Let's talk about the weekly chart. So zoom into that one, and I'll breeze through a few charts. If you recall, in some of last week's picks, some of them worked out very, very well last week. And so let's take a look at some of the near-term action and see what we can expect from those. Let's talk about XRT. Here's an interesting pattern. Outside, inside on the week. Watching to see which way it breaks. Retail, again, being in focus for the coming week, right? Everyone's watching the U.S. consumer. How does it break, and how do the retail players play out? XRT, outside, inside. How does this thing break? Hertz, rental. Been getting beat up for a while here now, but outside, inside forming up right there with the quarterly, monthly opens. Thing can break above here, coming back up through there. And then that looks potentially interesting. Dollar Tree, another non-cyclical name. Okay, outside inside going right into highs, right? So here, get the momentum. Players coming up here, and Dollar Tree looking quite strong to potentially go back to those all-time highs again on DLTR. Goose, outside week and down. So, but ends the week green. So outside week and down, this thing comes back up, come back up through the range. IBM reporting again on the 16th, which is Thursday. So watch out for this name. Setting up for something interesting here. Outside bar and down. We break above this pivot there. We possibly go after that pivot. With earnings coming out, it's definitely going to be a mover. Okay, so if this thing breaks above here, we're going after that pivot very, very quickly. Let's talk about the FANG names and we'll wrap things up. Let's do a quick review of these guys because it's been a while. Facebook. So Facebook, let's zoom out here for a second. Green in the month, green in the week. And slowly bleeding its way back up again. So even though the Facebook has been under a lot of negative news because of privacy and the lack of interest in Libra, the charts are kind of telling you that the selling has kind of has eased for the moment, and now you have a kind of a more positive bias. As all you can really say objectively is this, right? You're trading above the monthly and quarterly open. It did an outside bar down here that made it pop back above. And now you're trading above those levels. So the bias is to the upside here. Okay. Now let's talk about Apple, which has done phenomenally the past several weeks. And that's because, it just hit all-time highs. So, Apple, even in this market environment, with all the tariff talks and then being exposed to those tariffs, look at that. Look at that chart. All-time highs on Apple this past week. Look at the 12-month chart. I'm on the chart for Apple, and we got all-time highs, ladies and gentlemen, on Apple, so we can blow away that, and that's all-time highs. And look, outside bar. So at one point in the year, we did crack below the prior year's low, But guess what? You get that outside bar, and you know we took out those prior year's highs, and now you got all-time highs on Apple. And it started here, right? So here's the lesson on the weekly chart. This is when it happened. Okay, look, last quarter you're trading above the monthly and quarterly opens. Okay, right there. Then it does this: inside bar, down. This low here is actually lower than that bar. The low here is 217.47. The low here is 217.14. So this bar did break below that low. This went even lower. So this is the last week of September. As soon as it broke down, as soon as it comes back up, very similar to what we saw with Ethereum and Bitcoin, as soon as it comes back up, you have to watch out that it's not going to come out the other side, because if it comes out the other side, that turns into a inside bar reversal. Once it takes that high, bam, outside bar, and now up. Okay, so outside bar up. Now we want to wait and see when that momentum, when it subsides. That means taking out a prior low. That's all you need to wait for at this point. Until then, momentum is to the upside. Right? Look at this sequence here. The downside. Outside bar down, 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 down. You didn't know how far it was going to go, right? You couldn't tell, because until that happened. Outside bar to the upside. Same sequence. Well, not same, but a very good good price action, because look, it creates a new low. But as soon as it comes back through the range again, it comes out the other side, that creates the outside bar. And bam, outside up, 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 up for 4 consecutive weeks. Look at this sequence here. Outside up, 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 up. Well, this is actually slightly lower. That's true. So that is slightly lower. But then the rest it's higher again. So that's what you want to be watching for that momentum. So Apple being very strong, still doing the outside bar up thing. Amazon inside week. Okay, so inside week on Amazon, very, very tight trading Amazon right now. Trying to retest this possible breakout here. So it did do a breakout. I think you might see it better on the monthly chart. Yeah, so there it is. So on the monthly chart, you had an inside on the month. It broke up. It retested back then. Pop back again. Now it's come back and may retest that level again. 1673 area. But Amazon currently kind of tight trading. Want to see how this weekly chart breaks. So again, there's your level, right? It's getting tight. That's the contraction. Now we're looking for the expansion. How does it break out of those levels? And the last, actually 2 more charts. Netflix. Okay, outside bar and down. That move was going outside bar. Actually, let's go to the monthly chart first. Here, outside bar and down, down, down. Right? What do we know? Need to see a prior high get taken out before that momentum extinguishes. So that would be that high way up here. On the weekly chart, though, you have this momentum that was alleviated 2 weeks ago. Outside bar down, that high got taken out, went up. So the momentum here has been extinguished. Now the monthly chart still needs some work. We have those earnings coming up on the 16th. So right now it's just doing its up move. So we need to wait and see how that plays out. Okay, but for now, Netflix sort of slightly biased to the upside, even though there's that momentum move to the downside here, because you're trading above the quarterly open and the monthly open. If things keep moving up, you're gonna take out that pivot high there. Okay, last one to show, Google. Okay, so let's go on the week. So right now, red month, but looking like a doji, so more of a doji hammer. And let's go to the week. And there's a chart we need to watch right there. Here, outside and down, inside bar. So we want to be seeing, how does this inside bar get resolved, to the upside or the downside? The upside will turn this thing back to full time frame alignment, right? So back above the quarterly open, monthly open. You break down here though, right? Then you got full time frame alignment to the downside, with the risk of coming back through this range here. Okay, so I hope this week's video was of use to you. As always, if you enjoy the videos, please give us a big thumbs up. That gives us a chance to attract more viewers. At the same time, just hit subscribe, so that way when I do post the videos, you do find out about them right away, or you can check our blog site as well. And lastly, if you have any stocks that you'd like me to add to the analysis, feel free to add them to the comment section on the blog or on YouTube. And as always, I wish you a good trading week and happy trading. All the best.